We are at the beginning of a massive shift in the housing market, and the market will continue to decline for decades to come. Let's dig into why this is and what is happening on the ground right now. And I want to hear from you too. Are you seeing the same things that I am seeing? And the data is backing it up all along the way. So let's dig into the charts. Number one, this is how it all starts. Real estate is an illiquid asset class. It takes time for it to correct. And the number one issue that we're seeing is that new listings are coming on faster, listings are selling, so sold listings. And you might notice that the active listings on this blue line are starting to decline, even though there's a gap in the number of new listings and sold listings. This is because there are sellers who are frustrated, not getting the price that they want, pulling their house off of the market, and this inventory will come on quarter two, quarter three of next year, sometimes during busy season. So we're going to see a massive number of supply coming onto the market next year that's going to continue to push prices down. But it's step by step. Every single month, you're going to see this tiny little gap here. It could widen, or if it just continues on, you start to see the active inventory start to move up step by step. This is why we can say, hey, it can take 4 or 5 years for this narrative to play out the way that we expect it to happen. And also, by the way, it depends on where you're located. The Northeast is completely different than the Sunbelt. This is regarding the Sunbelt. The Sunbelt is totally screwed, and I'm going to share with you exactly why that is because of this chart and the detail that it has and what is expected in the future. So recently that came out is that we're in an affordability crisis. This is a viral chart that came out from Mike Green's analysis. He's an investment strategist where he defined what the poverty level of income is back in 1963 versus what it is today. And he said basically in this long email after doing all the math, it is 16x higher of a poverty level than it was in 1963, in that the average income that somebody needs to make for a household is about $140,000, which would be equivalent to the poverty level back in 1963. There's various reasons for this that he goes over. So I'm just going to read this excerpt for you. This researcher from the Social Security Administration is saying from 1963, a floor made sense. Housing was relatively cheap. A family could rent a decent apartment or buy a home on a single income. Healthcare was provided by employers, and the cost was relatively low. Childcare really didn't exist at this time because mothers stayed home, right? Didn't have dual income work families. Cars were affordable. You only needed usually like one car. If it was prone to breakdowns, few with, they didn't have the luxury frills that we had, the neighborhood kids and all this other kind of stuff. So college tuition could also be covered by a summer job. Think about that for just a second. And retirement meant a pension income, which really does not happen anymore. We have a lot of 401ks. They shifted it to you. So the method that she used was that there were food times 3 formula was crude, but it was a crisis level threshold. So the amount of money that a family would spend on food times 3, that would be the poverty level of income in order to live. And so again, if you use that same metric today, then it's actually 16 times higher than it was back then to even have a fighting chance to survive in this economy. This is because purchasing power has absolutely collapsed in our country after we went off the gold standard. And this is what Mike continues to say. Housing now consumes 35 to 45% of the income. Absolutely. I mean, the average that we're seeing right now is about 40% of your income goes to just shelter costs, which is insane. Healthcare takes 15 to 25%. Absolutely true. Childcare for families with young children can eat 20 to 40%. This is the main thing. I mean, childcare is one of the most expensive costs. I can't believe how much it costs to have 3 children right now between me and my wife. So he does the math, and he basically comes out to it would be between $130,000 and $150,000 using the same measurement thresholds and defining what is too little to live on. So keeping the same measurement methods equivalent, this is what it kind of looks like using conservative national data according to Mike's analysis. Childcare 32, housing 23, food 14, transportation 14, healthcare 10, other essentials 21. So your net income required is 118, but of course you have to pay tax on the income you make, include your FICA taxes, federal and state. Florida, we don't have any state tax, but it comes out to 136,500. This is crazy. The median household income in Jacksonville, Florida is 68,000, and what you need to even buy a house is about 120,000. So you need basically 2 households to come together in order to afford a home today. This is why we're seeing an affordability crisis absolutely impact the real estate market. Worse, the builders are building properties that are $500,000 plus in price points, completely unachievable to the majority of Americans and the majority of locals. They do this because their profit margins are higher on these higher priced homes. I predict in the future that these builders will start moving down the price and start providing affordable housing because it's the only thing they're going to be able to sell in the future, because I don't think wages are going to get any better from here. And I'd love to hear your thoughts on that. Do you actually think that wages will keep up? Because I can tell you they haven't caught up in the past. So let's look at money supply. The money supply has grown over 148% faster than the government CPI index would indicate. This is wild. So the M2 money supply is just growing rapidly, 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 especially after we got off the gold standard. This is what's causing inflation across the board of all assets. There's more money floating around in the economy, chasing the same number of goods, or the goods aren't keeping up and there's just more money out there. This is causing a huge problem. And now that we're off the gold standard, this is what it says it takes to buy the S&P 500 divided by the average hourly wage. So it used to take in 1971 25 hours of work to be able to buy stocks in the S&P 500 index. Now it takes 212 hours of work. I mean, you're talking about 10x more work to buy the same asset just within a 50-ish year period. That is insanity. And this is why the next generation is screaming affordability is the number one factor that's impacting our generation. Meanwhile, the people who own the stocks, right, the older generations are saying, hey, you just need to work harder. You don't need to buy Starbucks, etc. They drive this narrative that we're all just lazy, don't work hard. That is true for some of the generation, but I can tell you it is 10x. What this is showing is 10x harder to own stock, and it's about 6 to 7x harder to own real estate when we're adjusting for wages. So get real on this, because it is completely different for the next generation than it was for the previous generations. And purchasing power has collapsed. Look at this. Purchasing power on personal income has collapsed 34%, and purchasing power on total wages has collapsed 42%, according to this chart. So it is getting worse and worse, and the gains are going more to the top and less to the bottom, and people feel like they're trapped and they have no way out. That's why we're starting to see this socialist movement out there. I'm not a fan of this. I believe in capitalism personally. However, I understand how hard it is for the next generation, and if government doesn't start taking this seriously and stop inflating assets, purposefully to keep them going, we're going to have a revolution from the younger generations, because their purchasing power just continues to get eroded and they don't own enough assets to keep up and avoid this purchasing power crisis. And all of this, of course, has made it way harder to buy if you're a home buyer. And this is what is showing up in the numbers, right? Of course, the people who bought a while ago, 20 years ago, and had held their properties all the way until now, they're selling their house and they're buying another. Why? Because they bought at a great time and now they're selling their house. They had their equity pay down from holding their mortgage and they're buying another house. They actually have the money to be able to purchase. But the first-time home buyers, they have to have dual incomes. They have to have not a lot of student debt, and it's very small number of actual people who can buy in today's market. That's why you see first-time home buyer age has increased by nearly a decade over the last couple decades. This means that people are putting off buying a house, they're putting off starting a family, they're putting off getting married, and this is impacting the entire social situation of the United States that could change the entire view of housing and how housing works down the line. So there were people who, of course, got that lottery ticket birth year where they were born in the right year, they were able to buy it the right year at the right time, and they lived through. Congratulations to them. I don't have a problem with that. I'm glad some people are successful and they got lucky on the timing of their birth and when they could purchase. However, do we want to create a market where the next generation has a chance to build a life financially without just being completely strapped to the bank? And I think this is a huge problem that we're going to see unrest, over the next couple of years, and a lot of change in how things are done in the United States. I don't know if that's good or bad. However, it is important for us to have this conversation as a community and not just blame the boomers for this issue or blame the young generation for this issue. This is a societal issue that's going to impact all of us together. Another view of this affordability crisis, this comes from 2000, right? The house price to income ratio, right? So it used to be 3-to-1. So if your income was 60,000, your house price would be 180. Okay. That's how it was in 2000. Well, if you fast forward this data to what it was in 2022, it's now 7-to-1 ratio of income house price to income ratio. This means it got so much harder to be able to purchase a house in 2022. And I can tell you in 2025, it's even worse because we've seen the interest rates go basically from the 2% all the way up to 6.5%. Luckily, rates have been coming down just a little bit, but that's because we have an employment issue where people are starting to lose their jobs. It's not for the right reasons that we're seeing this change. So what's next, right? So we have our affordability crisis. What happens after this affordability crisis works through? Well, we have a massive demographic crisis and a demographic collapse that's coming through. This is a great chart from the Census Bureau that says where deaths outnumber births. Okay, so obviously you can see parts of the Northeast and definitely in the South, people aren't having enough children to be able to keep up with the number of deaths that's happening. And over the next 10 years, it's estimated by Harvard studies that we're going to have between 13 to 15 million, sadly, boomers plus age pass away. Well, those houses will come onto the market, and it's going to be a massive impact for the real estate market. Not only are we have all this new construction that's going on, and we're already overbuilt in the Sunbelt, but the people who are already living here will pass away. Their house will come on the market. There's more inventory. Well, the next generation can't afford already the inventory right now. So what's going to happen? Obviously, prices are going to come down. It has to come down over time. And look, this is a great chart that came out from Reventure. Birth versus death rate spells trouble for the U.S. housing market. You can see that the birth rate has been declining as things become more unaffordable every single year, and that the death rate is starting to increase because of the boomer generation starting to peak out. So it's at one point we're going to have a declining population. This is estimated to be 2032 is going to be the crossover point where we're going to have more deaths than births. Now, if you're thinking like a real estate investor and I want to own real estate for the next 30 years, this is a huge thing to take into consideration because the only thing that could save us is immigration. And then it depends on what your immigration policy stance is and what the government's going to do. Will we have to import people from other countries because Americans aren't having enough kids? And that's the only way that we keep our population up. So this is a massive issue that we're going to be dealing with in our lifetime. And by the way, this is the projections that came out from the University of Minnesota when they were looking at the cumulative change in boomer homeowner households, which basically is how many boomers will pass every single year. And this is crazy, the numbers that are coming out here. So, and this is the cumulative amount that they estimate over 2035, the next decade. 9.2 million homeowner households will move over. Well, it actually could be double what you're seeing right now on this chart. So it could be up to 18 million. Well, I can tell you our current sales rate is 4 million sales. So you're talking about adding between 2 years to 4 years months of supply of inventory onto the market. Okay, that would be devastating. So right now we're at like a 5-month rate of inventory, and you could be seeing just from these boomer deaths, older, again, this is very sad, but this is a reality. That you could see another 24 months added to that. You could have 30 months supply of inventory just if everything else holds equal. This happens and this inventory comes onto the market, right? If we don't see prices decline. That is why I expect prices to decline over the next 4 to 5 years, and especially over the next decade as this accelerates. And this is another chart that came out. The U.S. fertility rate reached all-time low in 2023. This is just another indicator saying that, hey, people are not having kids. Number of births per 1,000 women ages 15 to 44 from 1909 to 2023, right? So this is really low. This is a symptom of the affordability crisis. People feel like they can't have kids because it's going to be too affordable. They had, even with dual incomes, they're not able to buy a house, they're renting. They feel like the cost of childcare is crazy. And in some cases, even in Mike Green's report, it makes more sense to earn less money and live off of the government than it does to have two incomes, because you're going to have to pay for childcare. So you actually have to do the math on this and say, hey, does it even make sense for this person to work? Or does it make sense to have just one income and then get all the benefits from the government because you're living below the poverty level, which now apparently is $130,000 when you're making adjustments. So what is happening right now? Okay. In Jacksonville, what we're seeing is the sold to list price ratio is declining. This is because we're seeing more inventory come on the market. Obviously, we're seeing some seasonality in play, but this basically means that sellers aren't getting what they want for their house. They're going to have to take lower. They're taking about 7 to 8% lower than what they wanted on their original list price. I expect this to continue to go lower. Sellers unreasonable. They want the highest price that they can. They're thinking in prior years what their neighbor got. and all of a sudden they can't sell their house. It sits for 90 days, and then boom, if they're actually motivated, they will reduce the price of their property. So the immediate issue that's causing this is affordability. The future issue that will cause this sold to this price ratio go lower is a demographic crisis, which includes these homes that are often older and outdated that need a lot of work. And this will cause real estate prices to continue falling. Also, on the other end, if you have more inventory coming on and buyers aren't as motivated to buy because it's completely unaffordable and just waiting for you to drop the price, your days on market will start moving up. So I expect days on market to move up moving forward as well as the affordability crisis accelerates. And I do think it will accelerate because the government and the Fed aren't doing anything to help the next generation right now. And they're the only ones who are going to be buying these houses unless there's boomers just trading houses to each other. So to summarize, listings are moving up due to an affordability crisis, speculation of builders who overbuilt in the South due to the zero interest rate policy from the Fed. So the builders came out and they just built all this luxury inventory. And then the affordability crisis that we're all experiencing right now is caused by getting off of the gold standard in an unaccountable Fed and Congress where they just continue to spend your tax dollars, go further into debt, and push asset prices higher and higher for the owners in this country. And this is after our affordability crisis, we will have the demographic crisis. And in between those two, it's likely that we're going to have an employment crisis due to AI, which who knows how that's going to play out. I think there's going to be a lot of job loss caused by AI. And obviously, if you don't have a job, you can't purchase a house. So a lot of this will play out over the next 5 to 10 years, which makes me a very conservative real estate investor. I prefer to flip in this market versus buy and hold. Of course, there'll always be opportunities in any market, but right now buying near the peak is a huge red flag, especially if you're in the Sunbelt area and you're near new construction communities. And already this year, we saw this report come out from Zillow, which half of properties have already lost their value over the past year. So the market has completely changed from the hottest sellers market ever. We're going into a buyer's market and we're starting to see the prices decline. So I'd love to hear from you. What are you doing to prepare now for so many headwinds that are on the horizon in real estate? Are you a buy and hold investor? Are you a flipper? Are you just looking to buy your primary residence so you don't have to pay your rent amount? I'd love to hear from you in the comment below. And then what are you seeing locally? Are you seeing more for sale signs pop up? Are you seeing price declines? All of that. And then how far do you think that prices will fall? My estimates, according to my financial models using my investment banking background, is that we'll see a 31 to 42% decline in prices from the peak in October 2022. And this is what needs to happen for affordability to come back into the market so the next generation has the potential to buy in and cash out the generation that owned these assets over the year. So love to hear from you. As always, you can subscribe to my Substack. I talk about things on there that I can't talk about on YouTube. And I'm creating a secret inner circle community. So be on the lookout for that. If you're interested in the inner circle, reach out to me. This is we're going to have offline conversations about what's happening in real estate and the charts you need to know in order to make the best decision for you as an investor, a real estate, a seller, a buyer, or if you're even an independent brokerage owner. You can be part of this community and get insights to what is going on and how to operate your business at the highest level or make the best investment that you can possibly make according to your information. These are all my personal opinions. This is not legal or investment advice. I'm sharing what I would do with my money at each state in the market. And we've been wildly successful in the past. Of course, we've made mistakes. We want you to learn from those. So thanks so much for watching, and I'll see you next week.